Hey there, fellow investors and traders, and welcome back to our channel where we deep dive into the exciting world of finance. Today, we have some breaking news to share with you that's sending shockwaves through the industry. The SEC is turning up the heat on Binance, the world's leading cryptocurrency exchange. But that's not all. We'll also be uncovering the secrets behind the stock market approaching the golden pocket, a potential game changer for traders and investors. And hold on tight as well, because the options market is showing us something fascinating that's in store for us. Get ready for an eye-opening discussion filled with insights you won't want to miss. Let's jump right in. Well, welcome back everybody to the Daily Show where we talk about markets around the world. Of course, today we're covering stocks, commodities and cryptos, macro data, information in general, and of course, the hottest charts with the key levels. If it's your first time here, welcome to the community. And of course, smash that notification bell, hit the like button and subscribe if you find value in today's video. I'm sure you will. We've got a lot to cover. So first up, it's an expensive product from Apple, but hey, it's a new product. $3,499 is all it will cost you for the Vision Pro headset. And of course, Apple unveiled a whole bunch of things which sent the stock to new all-time highs. We discussed this in our live stream, which we perform here every Monday for the pre-open, and we discussed the idea that what happened around the all-time high would be important. Are we seeing a buy the rumor, sell the fact here on Apple? Well, it's certainly a very interesting level. On top of this, the news kept getting bigger, and this sent crypto, especially Bitcoin, into a bit of a meltdown. Binance is accused of web deception in the US, and the SEC is turning up the heat on Binance. When we see things like this, of course, it creates a huge amount of stir and often leads to an initial sell-off. Will that head and shoulders complete? 24,000 is on the cards here for Bitcoin, and we'll be talking about that a little bit later on in the video. I also want to remind investors and traders and everybody that's joining this channel that we always like to update our forward PE ratios all the time. This helps us understand whether it's a great time to invest or a great time to potentially be sitting there going, well, it's not bad to hold our positions, but maybe it's not the best time to enter in. Now, if you're looking at just forward PE of the total S&P 500, it's currently trading at 18.02. Now, this has actually been upgraded a little bit recently, and you'll notice that it was 18.4, and now it's come back down even though the price has remained relatively stable. This is because some big analysts are actually upgrading the biggest technology stocks. But are we cheap? Not yet. 16.8 or under is when you start getting cheap. And of course, one standard deviation, just when you get around that 14.5, 15 is a beautiful point. Do you often see that? No, but when you do see it, you might know what to do. If you haven't already, jump on over to our Twitter, links in the description down below. We posted here a very interesting chart, and this shows us the S&P 500 change in forward 12-month EPS versus the change in price over the last 10 years. And you can see here that we've seen a little bit of an uptick in the last couple of months of upgrades coming across the board. Most of those upgrades are going towards stocks such as AI stocks, but when they make up a huge percentage of the market, that is helping to boost the current EPS. There are some different countering approaches here, though. Here's an excerpt from, of course, Morgan Stanley's new report, and they said that they believe earnings per share for the S&P 500 are set to drop 16% this year, according to them. And this is a bit of a difference to, of course, what Goldman Sachs are saying, which they anticipate mild growth. At the end of the day, though, when you actually break it down and they talk about, how much they're expecting per S&P 500 kind of, overall position, they're saying 3,900, and last time we checked, 4K was actually Goldman's report by the end of December this year. At this time of recording, of course, we are closing in on 4,300. So basically, Morgan Stanley, Goldman Sachs, and everybody else are still saying that the market should be down further from this point. Are they going to be correct? Well, we'll find out in a few months, I'm sure. We're coming into Q3, which is a very important time for markets. So what about tech flows? Well, here's a great chart that shows how much money has actually gone into these technology stocks recently. No surprises. If you've been watching NVIDIA or anything from really semiconductors in general, they've been absolutely flying over the last couple of months. And we continue to see inflows into specific stocks. And this is a tale of still fairly low breadth, although it did improve on Friday and then lessen off on the Monday trade. So what have we got here? Well, this basically shows us probably a whole bunch of mutual funds being forced to buy in as they sat on the sidelines for quite some time with money. Does that mean it's the best time to buy? Historically, when you get flows like this, there's usually a pullback after it. And I think that's something to keep in mind. And we'll go through a lot of the bullish indicators and the bearish indicators as we approach a very key level. Have we seen turns in the market yet? No. Should we be scared yet? No. But are we seeing a lot of back end signs? Absolutely. And I think as we approach 4,300 on the SPY, we need to keep an open mind to the levels moving forward. Here's a bit of an update on the credit default swaps from the US Treasuries. And you can see here, since the debt ceiling agreement was made, look at that. Look at that heavy drop off. You'd almost say, why was the bonds market even concerned? I think we all knew that they were going to raise the rates. We just didn't know when, or raise the debt ceiling. But we just didn't know when they were going to do it. Obviously, it could have been now, it could have been a month from now when they're all complaining. But overall, look at those credit default swaps absolutely drop off. I've got two bits of information that I thought you might want to see. I did say on this channel, I only like bringing up information that's actually less than 50% or greater than 50% by a lot. So here's a read. It's called the NASDAQ Hindenburg Omen. I don't really look into this too much, but these are all the points that it's happened in the past. And of course, there's some stats for you. The data doesn't really lie. Obviously, when we get reads like this, it often leads into, I would say, a murky next 6 months, which makes some sense when you consider that we are in a pre-election year in these markets. Here's another one called the NASDAQ Titanic Syndrome. It sounds funny. Anyway, when we have a look over here, the next 2 weeks, interesting. We get readings like this. Often the markets were down. Again, statistically, markets are always bullish. They're sitting at about 59 to 68%, depending on the index you're looking at, per day over time. So when you get these kind of reads, 33% only bullish over the next 2 weeks when we see readings like this. And it's not like we have a small subset of data. We have quite a lot of data, and you can see some of the points in the past history to keep in mind, and of course, keep an open mind both ways. What about leverage traders? Well, we talked about how mutual funds are generally basically around 60 cents in every dollar going into the market. Recently, they've had to buy technology stocks. Makes sense. We've seen it in the charts. But what about the leverage guys? Well, the leverage guys remain incredibly leveraged. In fact, they're leveraged the same way they were in August before the turn point in the markets. So that's something to keep in mind. Now, does this mean they have lots of puts everywhere? Well, we'll discuss where the puts are a little later on. But you might notice that if you look at the middle of this month, the middle of June, maximum pain remains at around 410. We're currently trading close to 430 on the SPY. So we actually have room to potentially go down after this initial boost that's pushed us to these extremes. Let's look at some other evidence here. We will be highly anticipating our survey reports coming through later on this week. Look out for the Friday video. Make sure to subscribe for this, because if these survey reports come in how I think they might, I think we're going to see less bears, maybe down to 33, 34% on the bearish side, a lot of neutrals, and we're hoping for bullish. You basically want around 30% plus, and generally around 32, 33 would be exceptionally good for this. Now take a look at the 1 year bullish high. Look at when it happened. Notice what happened to the market. You can go and check it out about a week later. It's not a guarantee, nothing is, but of course, if you stack odds together, it does help you out. Where are we right now? We're coming into the middle of June. You can see here in pre-election years what tends to happen over this period. Usually there's a bit more left in the NASDAQ. There's a little bit more left in the markets. We'll find out, but they're currently still, of course, in an uptrend. So will we continue to get this? But generally that July into August or anywhere around here is where we have what we call the 6 months of kind of sideways action. You can see if we took an aggregate cycle, it grinds higher, but it's very low returns. So basically Q3 in particular, July into August will be a very interesting time for markets. And as we approach these critical zones, you need to keep that in mind. Now that we know these debt ceiling, federal debt limit things have happened, usually markets will go sideways to down. Of course, it's just the stat, but since the 1990s, that's tended to be how it works over the next kind of 10 to 20 days. Something interesting to keep in mind. Let's now look at some technical indicators as we go through the rest of these charts. We'll look at options very soon. Then we'll look at, of course, all of the things to do with crypto, commodities, and stocks and individuals and rotation. But we'll begin here with the skew, often considered kind of the black swan indicator. Now, when you get a 150, it means put's really expensive. We got a skew crush. Now, we've seen skew crushes before in 2022, and they've marked turning points in markets. Are they by themselves okay? No, but I have said that this is a very important point, and I don't think that is even debatable. We have seen a skew crush, and we're starting to see the turning points in the market towards puts again from the bigger players and of course calls still from the smaller players. Very interesting switches. I'll show you some of those a little bit later on in the video, but skew has been crushed. PCC, put call ratio, very low, usually a turning point. Let's have a look at another time this year, February the 2nd. Remember what we saw only about a week after that, and then 2 weeks after that, what happened? It's just something to be cautious of. This is another sign that usually, when you're looking at it, these are all the types of things that you start stacking together along with technical analysis. What about the volatility of the volatility, the VVIX? Well, the VVIX showed a greenie on Friday. So this is an interesting point because, of course, when we see TD13s and we see a green market, while a green kind of volatility while the market actually boosted, fairly rare signal. We've seen TD13s before, and we often do get a little bit of volatility coming through that zone. So it's going to be important to watch these and to, of course, pay attention to it. What about the percentage of stocks above the 200-day moving average? Everyone's yelling out about breadth. Yes, it has improved. Has it broken through? No. So we don't have a breakout yet of breadth in these markets. We do have a nice initial rotation, but not a breakout of breadth. We'll look at it later on today. What about S&P 500 stocks above 20-day moving average? Well, in general, it's been improving, which is good, but still not at an extreme high or an extreme low. Always great to have those on your chart. Here's another one that everyone's discussing, relatively speaking, because it's very important to do so. You've got to start to ask yourself the question, will technology continue to outperform the Russell 2000? It's very likely the Russell is getting close to its base, if not very, very likely to, continuously see consolidation. And one of the reasons is just the extreme amount of long-term puts that are sitting under certain levels. But at the same time, the NASDAQ has run off. That's symptomatic usually of new runs in markets. And we've seen this several times before. But when they run very hard, like they have right now, they go into periods of underperformance. Just look at 2020 and it'll make a lot of sense to you, and certainly a chart worthwhile watching. Here's another one that we need to bring up, which is, of course, Broadcom. This is just one of the semiconductor stocks that went really berserk over the last couple of weeks. And to me, this kind of candle generally tells us that we're in a blow-off. So while I still think that AVGO might drop and then rally up, this could be a multi-month kind of thing. In general, I usually expect the market to have topped in on this stock for the medium term. That's 3 to 6 months, even 9 months away. So AVGO to me is a no dice. However, it's something that I'm looking at along with NVIDIA. And NVIDIA didn't show us as bigger signals. We really wanted to see NVIDIA get crushed. That still hasn't happened. And if it gets crushed, 10, 15% from the top very quickly, that usually shows you're kind of in the topping range. At this point, we could just be consolidating for one last final push. Some other stocks that have been going around. We discussed this on the Monday stream. This was SoFi, obviously a risky stock, but like a lot of others, Palantir, SoFi, a lot of the favorites of 2021, some of them have some pretty incredible bases on it. And this is just a stock that I just thought I'd bring up and show you that these bases are there. If you have a look at PLTR, which continues to get a huge amount of calls and squeeze on it, you can see it's a very similar style base and an extreme push. So of course, it's risky, everything like that, but this is definitely in a squeeze at the moment. So it's just one of those stocks that's happening. What about Treasuries? People are asking about that a lot as we go through these items. Generally, Treasuries will show a positive signal, especially if the market does end up going negative for whatever reason. Maybe we see jobs start to get worse in the next month or 2 months as we enter into Q3. And I would keep this in mind along with everything else, just in terms of the Q3 of this year. This is 2011. You can notice some of the dates here, July into August. A time to be cautious in the markets, at least that's the way I feel about it. Everyone's hating on Treasuries. I don't hate Treasuries personally. I still think that 100 is an interesting technical. Obviously, these lows would be extremely interesting. And a lot of this comes back to the Federal Reserve as well. And what are they going to do about rates? Are they going to raise it 25 basis points? Are they going to pivot, just keep holding it here for a while and then eventually cut it? Well, those things will matter when it comes to Treasuries. If you believe they're going to cut a lot, Treasuries could be interesting. We'll move over to Dr. Copper. Looks like it's trying to break out here. So certainly, has it found its base? Was that all we got in terms of the metal sell? Well, we'll keep watching it. Copper is, of course, the doctor of the economy, and we need to know whether it's doing well or poorly. What about central bank inflows? This has been pretty much the greatest bull case of the year, along with upgrades in the AI sector. The second bull case has been the Federal Reserve sneakily, and other central banks around the world sneakily injecting money in. they continue not to drop it as much as you'd like if you were a bear. It's a bit disconcerting if you want to be a seller in these markets because, really it's helping you believe in keeping your positions, especially as an investor. I mean, look at this. They haven't really been dropping that green line. The purple line is off. And of course, the SPX divergence is red. This is still a time I would personally be cautious hitting into these highs. But this is the first time. Remember, we kind of talked about this a lot, especially on the NASDAQ. When the NASDAQ broke out down here at 321, effectively, it was going to always try to move to its next level. And that's what it's done so far. It's just basically been absolutely squeezing everybody. I haven't seen a deep red like this in a while, though. In fact, the last deep red I got like this was back in 2021. Is it an instant signal? No. Is it something that you should be paying attention to? In my opinion, yes. And of course, we will continue to follow this line. So make sure to subscribe if you're interested in this type of stuff, because central bank liquidity is a really important factor when it comes to these markets. And that is very disconnected. So we'll have to find what keeps going. What about the dollar versus the stock market? So of course, we saw a bit of weakness in the US dollar over the last 24 hours. Cool. That's exactly what we expected. Gold went up as well, which is cool. We'll check them out soon. And S&P 500 just basically floating into these previous high points. This 4,300 zone to 4,350 is one of the last bear zones really left in this market. So they better do something about it if they're going to. Another stock that we focused on last week was Disney. We ended up getting an island reversal. Decent day on it, only up 0.25. But since the market was down on the session, that was a pretty good little bounce. And I'd like to see Disney continue to find some strength. So we're just throwing in a couple of stocks here we're starting to see with the technical side. Speaking of stocks, we'll go to a sector and it's utilities. Did we see a strength in the defensives? Well, it was actually pretty strong at the beginning of the session. Then it rejected off. I think we can set alerts above here now. We would like to do that on things like XLP, XLU, XLV. And if we do get breakouts and closes above that zone, I think we know that rotation into defensives, often considered one of the last signals before a turn, could be occurring. And that's something that we want to be looking at. We also saw a huge amount of options flow. Now, this is something I reported on the weekend. What's with all these calls? So everybody's selling calls all over 4,300, 4,325, fairly large premiums, all fairly short dated as well, and specifically focused in at around the Fed's announcement of rate rises or rate holds or whatever, and then just after the OPEX, so just after the third week options expiration. Some very interesting flow coming in, and this is coming across the board. Let's take a look here at some of the biggest trades of the day. No surprises, Tesla is still seeing that incredible call squeeze, short-dated calls floating all over it. That's what's pushing this up. However, relative volume was down on the session. So I think it's starting to weaken there a little bit on the Tesla run as it's hit 220, one of the key levels. 230 is still possible, but remember, it is absolutely an extended market. And we'll look at the Tesla stock very, very soon. When we go through the rest of the stocks, you'll notice that Disney got a huge amount of calls on it. Everyone was getting ballistic on that. The call to put ratio was getting pretty big. And of course, there's the rest of these ones here, bunch of earnings reports causing some unusual options. But in general, it was a fairly weak day. It was really just like Google, and then obviously a lot of people still playing the Broadcom side. I think that's a bit misguided, but we'll find out. And then of course, Disney over here. Now, if we scroll down, you'll notice that the call amounts were still 55%. It's still unusual. We've got a huge amount of calls. As we saw with the PCC, this is a good sign for bears, around these levels. Calls are starting to get outrageous. And that's good because it means puts are becoming less used. Now, let's have a look through what happened. SPY, Qs, IWM made up the big indices. Let's go to the actual positions, though. Notice the dates here, all short-dated dates. But look at this, and I'm going to count them here. 1, 2, okay, 1, 2, fair enough. 3, 4, 5, okay? So basically, we have 2 of the bigger positions being calls and 1, 2 of the top 7. We've got a lot of puts. And in fact, puts continue to dominate here on the last 24 hours. So is this a big switch? Remember the biggest positions, look at that. That is no chump change. 570,000 volume at a 428 strike, pushing the market down on the SPY. There's a lot of puts starting to float around. This is the first time in a while we've seen such an outrageous amount of puts in comparison to calls on the 0 DTEs. So This is something we're looking at, and I'm specifically looking at these types of ones. What is this? Where did this come from? 18th of the 8th, the 408 strike. Okay, interesting there. And there's a few others that are like that as well. IWM puts and SPY puts in general. They're starting to come into the market. These are bigger players getting involved while smaller players continue to buy the calls out of control. Let's move over here to the individual stocks. No surprises. Apple was at the forefront of the call strikes. Why? Well, they had a big announcement. Tesla also there. No surprises. We knew those two were there. But as we scroll down, notice SoFi actually rocked up in this for one of the first times. We saw it a little bit last week. Then it was announced to us. A few of the members said, check it out. Totally agree with them. That was an interesting play. And we saw a bunch of calls coming in here. And as we scroll down, we also saw Disney as well, showing a bunch of 0DTE style positioning. So interesting options coming through here on the short dates. Now we need to see if we get a lot of long date or at least short date puts coming through for the markets. I'm looking for short date puts to push us down. We'll find out whether they come through. Remember, to that flow, we update you here on the channel. What about the idea of an interest rate hike? Well, I guess they don't believe in it anymore. A week ago, 70% of them basically thought it was going to be an interest rate hike. Now nobody believes it's an interest rate hike. The Fed could drop it on this one. Imagine if they went 25 basis points, it won't be packed in. What do you think in the comments down below? Let me know if you think they're going to raise rates or not. And maybe we'll do a poll on the channel and see what everybody thinks. Last 5 days of rotation. Interesting. Metals coming out in front. One of the sectors I've obviously been very negative on for quite some time this year with demand destruction. Had a good couple of sessions. We saw gold coming back in, which we noted. And of course, we've been interested in gold recently in the last couple of days of session trading. And then we had consumer discretionary, often considered the third sector that goes with the bull market. So if consumer discretionary continues to go bullish, that will be big. But what about the last 24 hours? Look at this change. Defensives held actually better. Gold was number 1. XLU was number 2. XLV was number 3. IBB sometimes can be defensive. It's doing its own thing, the biotech sector. And then we had staples also holding up in the top, while you had regional banks, semiconductors, metals, energy, and even technology showing the weakness. So if that continues, remember we look for 2 to 3 days of that to actually show us that the market is actually turning defensive and the big guys are hiding. We want to see them hiding. If they're not ducking and covering, why should anyone else be ducking and covering? That's always a good thing to keep in mind with these markets. US dollar, nice rejection here. Big rejection coming exactly off the area we talked about. On the short dated kind of side, I'm hoping that, well, actually, I'd like to see the market just kind of sell continuously here. It just made a new low. Ideally, it wouldn't have done that. Ideally, it would have rallied and then done this. But yeah, the US dollar is at a critical point. It wiped people on the euro. So if you're a currency trader, you can go have a look at the euro and see what I mean by that. But this is exactly where we expected the dollar to find some weakness. I'd like to see it find further weakness, and that to probably also strengthen the gold position. So if we take a look at gold, it came down to the trend line low, found buyers, and now what it needs to do is it needs to clear 1992 and more specifically 1983. We have to clear these levels to allow gold to be bullish again. I'm also looking for money manager flow. We'll update you on the weekend video on whether this is going to happen or not. But money manager flow, big deal. I want to see it happen on gold. And if they come in, it'll be strong. And what you want to see at the same time is yields start to turn down. Remember, gold is not actually, it doesn't actually like high interest rates. So yeah, very interesting point for gold. We found the bounce where we thought we'd find the bounce. Now will we find a continued follow through? Because this is a very heavy sell zone for gold. And if we go to the daily here, you can see it's starting to get convoluted through this. But look at this, just cannot get through that 1982, and 1992 will be also important for it. If it does, and you still are bearish, back down to this green line. If we make a new low under 1939, 1910, 1900 for gold, in my opinion. Let's move over to oil, a weak session for it. And oil certainly struggled here, rejected off this pretty high traded zone. Another rejection. Do we see further follow through? Interesting point for oil. I'm negative on oil, but not too sure whether I'd short it here. You do tend to see a bit of strength in the start of June, which I reported on late on May. We all talked about this together, and I'm kind of just still chilling at this stage. So oil, big rejection, looks good on paper. We'll find out whether it continues. Let's move over to Tesla being run by the options call buyers, all the short dates. That's been on an epic run. In fact, it hit a TD9, so it's probably exhausted. But as we know, this can happen on Tesla. Tesla can get wild for quite a while as everyone stacks into these short date calls. And then just when everyone jumps in at huge positions, they get really hyper. It pulls the rug on you. We've seen it many, many times before. So do I still think 145 is possible for Tesla? Absolutely. People would say I'm misguided on that. Well, I still think it's very possible. I don't have any position for it at the moment, but I might actually open one if I get the right prices. So over here, we've got 230. That's an interesting zone. I've always called it extreme zone number 2. We've hit those highs. We found a long leg doji. If it's going to fail, this could be a level. I don't see the sign of a failing yet. For day traders, you're going to look for the market to open up negative on Tesla, create a small island reversal, and then hopefully create further shorting pressure to allow that day trade through. Going against this trend, though, will require some kind of gap down, in my opinion. At least that's what we're looking at. Apple, new high. Interesting. I put this on the video and I said, look, I think it'll probably reject off this after it squeezes everybody out. It certainly did. It took all of the stop losses, and I feel a bit bad for people that were above there getting wrecked. I'm obviously on the record talking about this area as me believing that there would be a scale down from larger positions, and that's what I would have done. I know from that point on, let's have a look here. It's up at about, well, now it's only up about 3, but did go up about another 6, which is considerable. So let's have a look at the 2 hour here. It basically just got shreked all the way down. I'd be looking now for rejection. So I'd want to see it come back up to maybe this level around there, 182.93, and find sellers again. This is such a canary zone for the stock market. I mean, Apple is the stock that retail traders love. It's always been considered the one that often shows us the turn. We have absolutely no turn yet, but as a day trader, I would have probably, this is the zone. I was waiting for this for quite some time. These kind of key levels are super critical. All-time highs. I mean, it doesn't happen every day. So we witnessed history. We witnessed a $4,000 or $3,500 thing that you put on your face and then, of course, do work with it and stuff. I'm not really too familiar with what it's going to be. But over here, we get the switch. So if we get a switch in here and then we sell off again, I would guess that at least that's going to give us a few days of sell. Apple at critical highs. People ask me about the DAX in Europe. Well, golden pocket from the high to the low. It's switched a little bit. Will it continue? This is still stuck in the range. I don't think swing traders are necessarily in this until it gets underneath these key zones. And if it doesn't get under that, well, it's still theoretically in an uptrend. XJO, I've been very negative on this market, obviously the Australian market here. And so far, so good. It rejected again. It's finding 0.5% down weakness here at the time of recording. I'm looking for a new low. New low should expose 6,950. So yeah, continuing to look for demand destruction. So far, relatively so good on that market. IWM, turn point? Question. Very important level here. And we can see that it broke out. Everyone was talking about it. It made me certainly believe that we need to be a little bit cautious here. Look, it looks great on paperwork. If you are bullish in the markets, you have to believe that IWM or the small caps in general should be big winners. And specifically the growth sector of the small caps could be a good decade winner if you believe in AI and small companies coming through the back end of the market and becoming some of the biggest. So it's something of interest. I think we do have the breakout. IWM is well known, though, to give you falsies. So what I mean by that is, here's a false break on IWM. Ugh. There's a false break over there. Ugh. There's a breakout that happens here. Horrible. And then, of course, we've had those August periods as well and multiple rallies of this market. So it's not a bad price. It's certainly exciting level. And I think day traders will be looking for buy signals on that through the session. Let's move over to the Qs. Are we at a critical point? Kind of yes, kind of no. On the daily we are. We've hit a zone which is in here. We still haven't filled the gap though, which sits at 361. I could still see upside potential of the Qs up into here. It's obviously extended. So if you throw something like a weekly moving average on this, you might notice we're super far away from the weekly. And this means mean reversion should theoretically be coming soon. 10% away, it's not unheard of, but it's starting, as you can see here, it's starting to get historically pretty far away from mean reversion, which generally means you're at close to a turning point. No signs yet. And of course, we only have 1 day of potential sell so far. So it's not quite the turn on PA just yet. Here's the futures market. You can see I've marked this level and I've marked the 15K as well. It's certainly on exhaustion. Usually around this level, we will get a little bit of a turn, but a TD9 is not enough to individually just go, oh yeah, that's the epic sell. Sells on TD9s can be very shallow. Look at this one. It was only like 1.5%, 2%. So yeah, it's exhausted. Yes, it's been running, but we don't have a big turn point. I've marked out here 14,212. To take out that trough would actually take the trend at least on something like a 2-hour daily. So at this stage, it's certainly exhausted looking, but you'd be more guessing than anything else. And that's up to you. And of course, you got to make your own decisions. Patience, react, don't predict is what I always say. US Dow, that's found some nice buying. We saw weakness in the Dow a few weeks ago, which we reported on. We also saw it in the Dow Jones Transportation Index. Only 2 times it happened, 2020 and 2011. And both times the market squeezed higher first. Since then, we have squeezed higher. Then we got a sell-off. Will we get it again? Here's the SPX from the start of the video. Golden pocket. What that means is we're hitting a 61.8 of the entire retracement down. You'll hear a lot of people measuring the S&P from the low. So what they'll do is they'll grab the low off, they'll measure it up, and they'll state, depending on where they take it from, oh, it's on 20%, or it's on, more or less. It really depends. I mean, basically, you could say it's already gone over 20, as you can see in that measurement, but a lot of people are discussing this concept. Here's a little bit of the turn. 4,300 basically hit. 4,304 was the final gap. There are so many gaps left below. I've marked them all here, or marked most of them. Obviously, we still have gaps here as well, but there are so many. So there is plenty of downside that needs to be filled eventually. This will generally be filled, though gaps can stay open, but that's a lot of them. So we've got big trade zones through these very important levels. I would mark them up. I think they're very key levels to be marked in the charts. We've got a critical resistance hitting that isn't just a normal resistance, it's a critical resistance. It's a big level. I've had this on now for months and months and months and months. I can't remember how long we've had it there, for ages. And it finally hit into it. Now, I'd actually like to see a steal of the high. So personally, I'd rather like this. Okay, and that to occur. That would actually be more making of the sense. So we don't have necessarily a big turn, but we do have a market that's found some weakness. Let's actually jump into the futures market here. We'll go 15 minutes. We'll load it in really tight, and you'll actually see there's a small switch. So here is kind of like our high. Here is our higher high and our low before that. We actually made a lower low in the session. So theoretically, this market might rally a little bit, but it's actually looking a little weak. And with the options flow that we saw in the last 24 hours, it's kind of marking out potential here with very little news this week to potentially find a little bit of sell-off after this exuberance that's come through. So yeah, it is showing 15-minute turns, and I think you can be aware of that, but it's going against trend, on the higher time frames. That makes it harder, and you have to be really nimble. Like every sell we've seen so far this year has been being fast and nimble and basically being in and out of markets. Now, where is a sell a little bit more brutal? It's got to be crypto. I mean, Bitcoin got through that low and it smashed it. SEC, well, they did it. So yeah, do we have a live head and shoulders? Most likely. Are we going back to this 24,000? Depends how this story, I guess, continues to, elevate. How much more FUD do we get in the crypto market? But from a pure technical standpoint, rally should be met by sell demand at this point. We went through the alert. We continued to maintain our bearish bias on this one because, of course, we had basically just bearish signals. And we still think that around 24,000 to 24,200 will be an interesting zone. So, yeah, I think crypto is kind of weak here, and Bitcoin is certainly finding the pain along with the rest of the markets. If you load up something like an Ethereum, it's not as bad as Bitcoin, but certainly Bitcoin's leading here with a new low. Let's move over to the information we're getting this week. Of course, we do have some information, unemployment claims on Thursday, and then, of course, we've got that for other countries as well. But this is a very weak week of news. So it really is allowed to be more technical, and it's also allowed to be more manipulative in terms of the options side of things. So if we keep seeing small dated puts coming through, I'd be paying attention to that along with the price action of this market. Good luck out there, everybody. If you enjoyed today's video, please remember to subscribe and smash that like button. Also, you can grab some free trading cheat sheets, links in the description down below if you want to know more about how to scalp and day trade and figure out swings, you can check out the day trading masterclass offer. And of course, follow us on our Twitter as well. We'll be posting a whole bunch of exclusive content over there and on our Discord. Thanks so much, everyone. Have a great day. We'll see you soon.